Hello, welcome back. We're here at Beaver Creek and I'm with Lynn Bailey, the Vice President of Investor Relations at Equinox Gold, the company who've just had their main flagship production, Greenstone, go into production. We've been talking about this for 3 years. Every time we see you, it's edging closer.
And then we finally did
We're there.
Pop the champagne.
First of all, congrats on making it into production.
Thank you.
Number one. Number two, congratulations on raising so much money for charity in conjunction with such an amazing event.
Oh yeah, what a wonderful experience.
Yeah.
It really was.
Good. Why don't we, just for those, I'm sure everyone's familiar with who you are and you've been on the channel loads, but quick recap as to who you are and your capital structure, and then we'll dive in.
Oh, we being Equinox Gold, not me, in my 25, 30-year mining industry.
Yes, please, yeah.
I joined Equinox Gold in 2016. We were like a little, $50 million, if that, market cap company at the time. A lot of growth since then. We've acquired 2 companies, acquired a mine, built 4 mines. Greenstone's the 4th mine that we've built. So we've gone from 0 production in 2016 to about 700,000 ounces of production this year, and we'll grow that again next year when Greenstone's operating at capacity.
Yeah, so you get up to about, what, 700,000 once Greenstone's up to capacity?
Well, yeah, so this year is 700,000, including about 190,000 from Greenstone, and then next year Greenstone, it won't be quite at capacity rate from day one next year, but when operating at capacity, it's about 400,000 ounces a year.
What does that do? Does that get you to the million mark that we've been talking about?
To the million ounce per year is our vision. We'll be pretty close with Greenstone.
Okay.
It sort of depends what the other mines are doing, of course. So we've got seven other operating mines, 2 in California, 4 in Brazil, 1 in Mexico, and then Greenstone's our new mine in Ontario, Canada. So Greenstone will certainly get us pretty close, but then we've got 3 expansion projects underway, 1 in Brazil, 1 in Mexico, and 1 in California. And when those are complete, those will get us well over the million ounce mark, assuming forward-looking statements, all of the other mines are operating as they currently are. Okay,
so obviously investors looking at the story at the moment, snapshot in time, obviously I think, what are we on the 10th of September today?
Sure.
What's the cap structure looking like? What's the share price? What's the market cap looking like? Because obviously you're on this pathway to being a pretty large gold producer.
Mm-hmm. Well, I think we kind of already are a pretty large gold producer. So 700,000 ounces of gold this year puts us, pretty solidly into the mid-tier producer range. Yep. We do have this longer-term vision of being a million ounce a year producer. There's no magic to that number. It's just sort of a demonstration of scale, of liquidity, of hopefully being able to return capital to shareholders, that kind of thing. So it's just sort of you've made it. You're now a senior producer mark, and so we will achieve that based on the projects that we currently have in our portfolio. But we do need to do a bit of development still. Those 3 expansion projects to get there. The cap structure today is about 428 million shares outstanding. We did issue some shares when we bought the remaining 40% of Greenstone in May, so some of those shares went to Orion. We did a bit of a capital raise. We've also got 3 convertible notes outstanding, so fully diluted, we're just about 500 million shares outstanding, and then the market cap today is around 2.2 billion US.
Okay, all right, so 2.2 billion US. When you compare that to other, I think this is the thing, as you grow in size, obviously 700 at the moment, going into the million mark, and then hopefully even beyond that. And you look at some of the other majors or mid-tiers, say for example like a Kinross or something, I think they're around 2.5 million ounces per annum, market cap around 10 billion. So to me, it's you're on that pathway to really still being quite a multi-bagger company, even though you're still a very large company. Is that?
Yeah, it's kind of an interesting valuation point in the company because our market cap is quite low when compared to our production, mostly because we've spent the last 2.5 years building Greenstone. So I think we're still almost valued as a development stage company, even though we've got 8 producing mines and we're going to produce 700,000 ounces this year. So it's a bit of a dichotomy between where we're at and where we're valued. I think as Greenstone ramps up, so we poured first gold on May 22nd. We did the mine opening on August 29th. We hope to be commercial around the end of Q3 as we continue to ramp up toward capacity, which is 27,000 tons per day, the 400,000 ounce per year. Hopefully we'll see that re-rated into our stock. But the market is pretty skeptical right now, not because of us in particular, just because there's been a few development stage projects over the last couple of years that went over budget or had some hiccups. And so the market, I think, is really taking a wait and see attitude. They're like, it's great that you poured gold on time. Now let's see you get to commercial. Now it's great that you're in commercial, at the end of Q3, let's see you get to capacity. So I think it's just going to be gradual baby steps to get to the full valuation of having that project reflected in our stock.
Yeah, no, I agree with that's fair enough. Okay, so obviously you're there. I think I saw that in the last press release that in August you're around 60% capacity at the moment, and you're saying so by Q3 you should be up near around the 90-100% mark. Is that the?
Yeah. So during August, I think it was that we had averaged 60% rolling, rolling 30-day average in August. We actually had one day in August where we almost hit capacity. We were at 26,248 tons per day.
Wow.
Capacity is 27,000. So clearly we can do it. So it's just a gradual ramp-up process, getting to know the mill, getting to know the pit. Working our way through the always little hiccups that you see along the way, but there's been nothing alarming, so we're really pleased with the process so far. We would like to be able to make that commercial production announcement around the end of Q3, and commercial for us is defined as, for easy math, 80% throughput, 80% recoveries for a 30-day consecutive period. Okay. So that will be our definition. So we'd like to achieve that around the end of Q3. The next catalyst after that would be sort of hopefully around 90% by year end, but then the next big milestone that people would be looking for is saying that we're at full capacity, which is the 27,000 tons per day. And hopefully that will be early in 2025 and then full speed ahead.
Good, okay, and let's go on to, I guess, one of the more important questions, which it was announced a few months back now, but I know it's been summer and people have been not paying too much of attention usually. Obviously you decided to acquire the additional 40% that Orion owned at the project level. What was the rationale? Obviously you spent around, what is it, about $1 billion?
Just shy of $1 billion to do that.
To acquire that. What was the rationale in your mind in terms of acquiring that 40%? And how do you work out, I guess even internally, what the payback is in terms of paying that £1 billion, or $1 billion, sorry, I should say, up front for something that you're going to get down the line? What's the payback look like on that?
Well, it's not something we get down the line. We get immediate payback because we've got 100% of the production now, right?
Yeah.
So we loved the project at 60%. It was going to give us 260,000 ounces a year. Now we own 100%, so we're going to get 400,000 ounces a year, and gold's above $2,500 an ounce. Yeah. And the all-in sustaining costs at Greenstone are less than $950, so that's a pretty good margin. So owning 100% of that project purely from a production, cash flow, EBITDA perspective is extraordinary. Plus there's all the upside that we own 100% of now as well, right? So there's nearly 4 million ounces in the underground deposit that aren't factored into the economics of the mine yet. We've got pit expansion potential, so we've got the underground potential, and then we've got regional regional opportunities that we now own 100% of as well. So we get 100% of the near-term production and cash flow growth, but then we also get all of that upside and exploration potential that could, significantly extend the mine life of this project. So It's all ours, and it's in Canada. It's in one of the world's best mining jurisdictions. We've got incredible community support. If you had a chance to log in and see the mine opening ceremony, you would have heard the things that people are saying about this mine and how much value it's going to bring, to the local Indigenous communities and the local communities. Great government support. So it's got everything that you look for in a project, and now we own 100%.
Yeah, I guess would it be fair to say to acquire the equivalent of 140,000 ounces plus all of that extent would probably cost you a lot, around $1 billion, if not more anyway, and then you'd have to go and build the mine, and you've actually already built it.
Exactly, yeah. So we get to buy the extra 40% without having that capital risk up front. So when we first looked at buying Premier Gold, we did the calculations at the time. Do we want to buy 100% rate out of the gate? But we didn't want to take all of the extra burden of the capital of building it. So we had Orion as a partner during the build, but we always intended to buy it out as soon as we could, and just luckily they decided to sell at a time where our share price was quite high, so we could do it with a term loan and a bit of equity, but not enormous equity dilution, so it worked out really well.
Knowing Orion, have they put anything on in terms of the deal, in terms of, I don't know, extra royalties or any extra streams or anything that might dampen down the economics at all? Is there anything tied up in the deal?
No, it was all described in the transaction, but it was cash and some shares.
Okay, brilliant. So obviously you've got this pathway now to ramp up and obviously get towards this 1 million ounce per annum. Let's talk a bit about the expansion projects that you're talking about there. I remember when we've spoken, they're in, I guess, a little bit trickier jurisdictions, some of those projects, but not necessarily. Obviously, most of South America is proven to be mining friendly. Where are the upside potentials with those mines that you're expanding? And I remember a while back there were some road blockages and other things that happened. I haven't seen anything in 2 years on that front. I'm assuming I'm assuming relations in those areas are going well. And
Oh,
that's,
you're
why
talking about Los Filos in
Yeah.
Mexico. Yeah, no, it's been pretty good. I think it's been more than 2 years since we had any issues there. So there's 3 expansion projects. The 2 biggest ones are Los Filos in Mexico, where what we're doing there, right now it's got a combination of underground and open pit deposits, but everything's going on a heap leach pad. Which is not the best way to process high-grade ore. So what we would like to do there is build a carbon and leach plant so that we could have all the higher-grade ore go into the carbon and leach plant, higher recoveries, more faster return on your production, and then have the open pit ore go onto the heap leach pad. So we'd like to have both of those processing opportunities available to us there. It is something that we had planned to do in 2020 when we first bought the mine. We bought it in March 2020. And then if you cast your mind back to March 2020, 3 days after we bought it, COVID shut the world down. Okay. The Mexican government shut down every single mine in the country for a few months. And then we did, like you said, have a couple of blockades. So that mine's never really got its feet under it since we owned it, which is unfortunate because it's a fantastic asset. It's got huge exploration potential. It just needs that carbon and leach plant to really be able to operate effectively. So what we're doing right now with Filos is renegotiating the land access and community agreements that we have with those communities. They're agreements that we inherited. Okay. When we bought it, they need to be sort of recast to reflect today's current economic environment with all the inflationary pressures and other things that we've seen. Hopefully we can get that done, and then that will give us the comfort to feel like we can go ahead and make the investment to build the carbon and leach plant that will see that mine produce closer to 300,000 ounces a year. So lots of upside there. The other project, the big project that we're working on is Castle Mountain in California. So right now it's like a little phase 1 pilot plant. It produces, 15, 20,000 ounces a year. With the expansion there, it'll put it up to over 200,000 ounces a year. So we're just moving through that permitting process now. Hoping to have those permits sometime in 2026, and then we would go ahead and build the Castle Mountain expansion, and that, like I said, would add about another 200,000. So with those 2 projects alone, it's going to add another 350,000 ounces a year. Then you've got the additional capacity coming out of Greenstone because, we're going to get about a 190 this year, but when operating at capacity, it's closer to 400,000 ounces a year. And then a smaller expansion at our Orion mine in Brazil, just to add the underground deposit into the mix. Right now it's an open pit. We would like to add the underground feed, and that would add maybe 20 to 25,000 ounces a year. So all 3 of those things are underway, but the exact timing about when they'll come into play and when we'll decide to, get the green light to start construction is uncertain at this time.
Okay. All right. So it's not feet up now that Greenstone's been built. It's all go still.
No, there's always things under the way. But the kind of nice thing, we were hoping originally to be able to pivot right from Greenstone to Castle Mountain, but we don't have those permits yet. But the nice thing is now we've got 2 years basically to just pay down some debt, build up the treasury, enjoy the cash flow that we'll get out of Greenstone, and then be able to redeploy that into one of those expansion projects.
Well, that's exactly what I was going to ask you was, do you foresee that these expansion projects will be funded through cash flow, or will you need to take on more debt?
It depends entirely on the gold price at the time and what our treasury looks like. But Greenstone, like I said, is really going to significantly increase our cash flow. Our number 1 priority for that in the near term is paying down some of the debt, but then build up the balance sheet and then hopefully be able to do more of those fundings internally.
Okay, and also just obviously it has brought down your all-in sustaining costs as a business quite dramatically, or it will do over the next couple of years. I'm assuming with the expansion projects, you're hoping that will probably do the same thing with the existing mines?
Yeah, exactly. Yeah. So that, obviously the more ounces you're producing, the lower your costs are on a per ounce basis. So Greenstone brings it down quite substantially with the increase in production, and then it's also our lowest cost mine. So all-in sustaining costs are expected to be below $950 per ounce. So that will, from a consolidated basis, bring our costs down quite significantly next year. And then Castle Mountain, right now is a very small high-cost mine. With the expansion, we would hope it would be certainly in the sort of low thousands. We have to update all the documents. The feasibilities were done a couple of years ago, so we need to update all of those documents to reflect, current input prices. Yep. But certainly there would be a significantly lower cost mine, and then Filos again, if we can get that production up, it significantly brings down the cost. So yes, our objective when we're at that sort of magic 1 million ounce mark would be have our consolidated all-in sustaining costs in the lower third of the industry.
Good. Okay, when can we expect some guidance on what this future looks like next year, and obviously with Greenstone up and running?
Well, we've just given our guidance for Greenstone, so that's all been released. We always do our annual guidance in sort of about the first week of February, generally seems to be the timing. At the moment, we're still doing just annual guidance. We're not giving multi-year guidance yet because we're still growing, right? Of course, You really need to be in a steady state and not have all these growth projects underway to be able to predict 5 years down the road where you're going to be at. But it'll be great to have some clarity on the timing for Philos and the timing for Castle Mountain, but I think you might have to wait another year for that.
All right, I'll talk to you about that next year. All right, Rylan, thank you for your time.
Pleasure.
Thank you.